That to me is the bigger piece. It's not the knowledge side. I can normally assimilate in my firm, whatever firm I'm working for. I can get the technical expertise to the table, but it's really getting deep with those critical conversation skills that we see as the differentiating factor.
Welcome to the Active Advisor Podcast, brought to you by Harbor Capital. Join us as we learn from pros who have helped thousands of investors live better lives. I'm Bryan Moore, and I'll be chatting with some of the brightest minds in the financial advisory business, bringing you insights on practice management and investment research that works for advisors and their clients. Joining me today on this episode of the Active Advisor Podcast is the Executive Chairman of Cannon Financial Institute, Phil Buchanan. Phil is a seasoned expert in the wealth management industry, having led key firms such as Argent Financial Group and Loris Holdings, with a focus on empowering financial professionals to achieve excellence in both technical expertise and client service. Phil has driven transformational growth through his insights on mergers, acquisitions, branding, and client engagement strategies across retail RIAs, trust firms, and family offices. That said, his influence and commitment stem far beyond his executive roles and shine through his many contributions as a thought leader in the industry. Without further ado, welcome, Phil, and thank you so much for joining us today.
Well, Bryan, thank you. It is a pleasure to be with you. It's fun to be on this side of the mic this time. So looking forward to this.
Awesome. So here on the Active Advisor, we always like to get the conversation started by asking each of our guests, what's the first memory that you have related to money or investing?
Yeah, I would guess that most of your guests have this neat, fun-filled memory of that. Mine was not as fun-filled. I lost a sibling when I was relatively young. She was a bit older than me, and she owned stock in First Georgia Railroad Bank. And I remember that my parents, as part of settling the estate, had those shares transferred to me. And I remember when the envelope showed up, and this was back in the day when they literally mailed certificates. A lot of your listeners would not relate to that probably, but they mailed certificates. And I remember holding that certificate and my mother telling me that I now owned a part. I didn't really understand the part, but owned part of the Georgia Railroad Bank. So that was my first memory. And I got so enthralled with that I literally wanted to go see this bank that I owned. And it was a few weeks later that my mother actually drove me to Atlanta and we drove by the building to see the bank that I owned. That's my first big memory there.
That's an awesome memory. Definitely one of the more original ones, but I absolutely love it. It seems like that memory kind of laid a foundation that's carried you throughout the rest of your professional life.
Oh, very much so. That's true for most of us, right? Those early conversations around the kitchen table or the strong edict that was laid down by a parent or a grandparent about you always need to do this about money. We carry those things. Those become anchors for us, and those can be very positive anchors or they can be very negative anchors. Understanding that makes all the difference, right?
Very true. Very true. Love to hear if you could give us a 60-second kind of story of yourself and why you chose to make CFI your home.
I think a lot of it goes back probably to that early experience of having lost a sibling and seeing the things that my parents went through. I wound up, after a very short dalliance in politics, working as a legislative aide on Capitol Hill. I went up working for a trust company of Georgia. And I remember interviewing and posing the question, what's really the mission of the trust company? And again, I've got it in paraphrased form, but I remember the recruiter saying that their job was to help families structure their financial life so that events, and I do remember she said it this way, so that events, whether planned or unplanned, don't create negative outcomes for generations to come. And I remember thinking about that and saying, that's kind of the experience my parents went through. Things weren't structured perfectly, and it caused some heartache. And so, I got involved in the trust business and had an opportunity to go and take a class from Cannon Financial Institute. Got to meet all of the players that were involved and eventually got recruited to be an adjunct faculty member and then got recruited to be a full-time employee. And that 3+ decades experience has given me tremendous personal satisfaction and joy. I can imagine having done nothing other than this, because the opportunity to help inspire the rising generation of advisors, helping them to do a better job with their clients long-term, it's a fantastic experience.
That's excellent. Great to hear. You mentioned advisors there at the tail end of your comment. What types of advisors are you partnering with at CFI, and what are the three broad focus areas you work with them on?
Our company began in 1961. Of course, I wasn't around for that, but at the time it began, it focused exclusively on the trust and family office space and providing technical education for new and even experienced professionals in those segments. Through the years, that has obviously morphed dramatically into working with all the major wirehouses, regionals, independents, insurance companies, RIAs. So we are, it's not a pejorative term, but we're agnostic as to channel. If you are an advisory firm, if you're an advisory practice, if you're an individual advisor, and it's your motivation to work with affluent, high net worth, ultra high net worth clients, we want to be there to help. Now, you asked about the three areas. I'll do them in broad terms, and then I think maybe we'll want to unpack them as we go. But the three broad areas, number one is the practice management process for advising affluent and wealthy families. It's different than running a practice providing investment counsel to investment clients. The second thing that we do is we focus on the knowledge that is necessary to advise wealthier clients. And this goes, far beyond investment management knowledge. And it gets into the challenges and issues that wealthy families face. And I want to talk about point of view on that a little bit later if we've got the opportunity. But the third thing, and if we've got a secret sauce, it's this third area. We help advisors with the critical conversations that they have with those individuals and those families that they are seeking to serve. All too often, it has been our experience that far too many investment professionals spend more time talking to their clients, sometimes talking at their clients, as opposed to talking with their clients. And so we spend a tremendous amount of time on the verbiage, on the conversation paths, on the discovery processes that these individuals have.
That's a lot to unpack there. And I think that definitely sounds like a full-time job without it.
For myself and 35 other professionals, right?
I bet. I'm curious, what would you say are the top two challenges advisors are facing with this ultra high net worth or high net worth segment?
I think we can tie it back pretty close to what we were just focused on. Number one, I've had so many of our clients say this: I don't know what I don't know. And that's a pretty honest assessment that all of us need to be confident enough to say. There are numerous, again, former single vertical investment professionals that really were looking to attract a higher net worth client, and they didn't feel, and probably rightfully so, that they had a broad enough base of knowledge as to the challenges and issues that wealthy clients face. You and I talked a little bit in our pre-conference about the fact that wealthy families, the marketable securities portion of their investment portfolio represents a minority of their overall net worth. And yet, as an investment professional, far too often, all that investment professional wants to talk about is that minority issue. So understanding the rest of a client's wealth structure, how that wealth was amassed, what the plans are for that wealth, what the various issues that could impact that client's overall wealth outside of, again, asset management. Having that knowledge, having that, we refer to it very often as conversational competency. We don't expect to build technical expertise in every issue a high net worth client could face. But you do need to be confident enough to engage in a conversation with a client about those issues. And that's really where the magic happens. I think the other major challenge that ties very closely to that is just the conversational confidence to approach those wealthier scenarios, to be able to go in and to create a unique value proposition that differentiates that advisor and what he or she can do working with those families. I think in many instances, that's the big step that we see people see them making, is that confidence of, I now feel confident in how to approach these individuals.
Excellent. So I think definitely sounds to me like the firm's really working in those three key areas, kind of helping them to build them up. What would you say in your at least initial assessment is kind of probably the area where you feel that these advisors need help the most? What's one area that you typically find them being weaker in? And that's not a bad thing, obviously, because they're
No, no, no.
to learn. It's just what areas, I guess, what is the key problematic area?
And I want to compliment you on something you just said. Just because we've got areas that are underdeveloped or lower in our skill set or knowledge base, that's not a negative. In every part of our life, we are going to have something that we're a little more skilled in, something we're a little less skilled in. I mean, I played a round of golf a couple of weeks ago, and I played with an individual, and he said, my putting's off, my putting's off. The guy didn't miss a single fairway all day. I think he missed 2 greens. He chipped up. He wasn't one putting, and he did have a couple of 3 putts, but he missed the fact that every other part of his game was super strong that day, but he was so focused on the negative side. So we've all got those areas and those aspects. Again, I'm going to go back to the critical conversations, and particularly around the area of discovery. If there's one thing we can all do a better job on, right, it would be that area of discovery, of being able to go deeper with our clients in areas where we are not the technical expert, to be able to get clients talking about the challenges and issues. And many times those are emotive. There are emotional issues. Every family has things that they are dealing with. And most of the time, they don't have somebody that they've got the confidence of being able to relate those issues to. And what we find is when advisors develop that relationship with their clients, that clients feel comfortable in lowering the shield, in really being brutally honest about what's going on with their family dynamics, with their businesses, with the way that they aspirationally want to accomplish things. That to me is the bigger piece. It's not the knowledge side. I can normally assimilate in my firm, whatever firm I'm working for. I can get the technical expertise to the table, but it's really getting deep with those critical conversation skills that we see as the differentiating factor.
It's funny. One of the things that we talk to a lot of high-performing advisors and firms such as yourselves on this podcast, and even being a wholesaler for a couple of years, occasionally you have to take a step back and go, this isn't just about stocks. This is actually a customer service job. This is about actually getting to know somebody and actually getting them to trust you and you trust them, and building that kind of strategy for their future.
It absolutely is. It's understanding also that clients do not make decisions in a cold-blooded, fact-based pattern. Clients make decisions a lot of times based on emotions. Does this feel right? Does it not feel right? When advisors really started focusing a lot on behavioral economics and understanding how their clients make decisions about their money, it really did improve the quality of the conversations, the quality of relationships, because now all of a sudden, they were beginning to look at things through the eyes of a client and not through the eyes of an investment professional. You and I were both trained probably in a similar way. I mean, we developed our story. I mean, this is our investment management process. This is what we do. This is how we make decisions, et cetera, et cetera. So we wound up talking at our clients quite a bit. Yet those individuals that are able to understand that clients don't see their investment portfolio the way we think they do, they're the ones that make the big difference.
Very true. Very true. In your opinion, are there 3 actionable things advisors can do differently today to either make an immediate impact in their business and their relationships with clients, or their competency in their overall practice?
So the first thing that I would suggest is that people get very conversationally competent on areas beyond investment management and retirement planning. Now, again, this is for individuals that want to go upstream. They want to work more affluent, more wealthy individuals. And go back, for those individuals, the majority of them, their investment portfolio is a minority of their overall net worth. So there's a bigger piece to the pie that's out there. I've got to have the confidence to go into other areas: philanthropy, estate planning, business succession planning, compensatory stock options, the like. I've got to be confident in having that dialogue with these individuals. The second thing is there are a lot of professionals out there who have clients that have no idea that they've got the capabilities to do anything other than what they're doing for them today. And so let me just unpack that for a second. I was with an advisory group a couple of weeks ago, and I was talking to one of the advisors that night, and she was going over one of her clients with me. And that client had a little over $5 million of investable assets with her. And it had been a client of hers for over 7 years. And we were talking about the fact that she's got all these other capabilities that her firm has the ability to solve. It was a fantastic way to expand the relationship. And she was like, I don't know what to say to it. I've been doing this for the last 7 years, this and only this. And I said, it's a repositioning conversation. Because here's what's going to wind up happening with that guy or family if you don't go and talk about the expansion. He's going to come to you at some point down the line and he's going to tell you about something that he's done with another firm. And you're going to look at him and you're going to say, but we've got the capability to do that. And then he is going to give you the worst words in business. The worst words in business are, I didn't know you did that. Because people only say, I didn't know you did that when they've just done what they didn't know you do with somebody else. And I said, that's what's going to wind up happening here. And so we've got to make sure that our clients that are strong clients, that are financially well qualified, make sure they know that we've got the capability to provide services beyond what we're doing today. And then the third thing is have the discovery conversation in those other areas. Go there, dig deep into the business that they own. On Monday of this week, I was with an advisor, and his client had come to the hotel where an event was happening. And I got introduced to the client. We chatted for just a little bit, and it came up that this individual had some pretty large timber holdings in West Central Georgia and into Alabama. And so we chatted for a while, and he had given me the acreage and all of that. And so when we were done, I asked the advisor, I said, how much investable dollars are you working with there? About $8.5 million. And I said, based on the amount of acreage and the rotational plan that he just laid out, they got about $70 million worth of timberland. I said, what conversations have you had with him about the family's plan for that, how that's structured, the next generation, what the estate plan is? And the individual just looked at me. It was as if he was seeing a ghost. And he was like, I've never had that conversation. So again, it goes back to, do I know what to talk about? Have I communicated to the client that we've got these other capabilities? And then do I have that conversation? If we could do those three things, it would be amazing what would occur.
I couldn't agree more. I mean, I think one of the things, it's interesting, we talked about practice management, knowledge, and communication. What I really view, especially in this business, that those three are so interwoven together.
Oh, yeah, absolutely.
It's almost hard to isolate one and not talk about the other two in some fashion.
Absolutely. You're so right.
So I would love to kind of hear, what do you guys, I guess, how do you work with clients a little bit more on the practice management side? Because the communication is obviously key. And you mentioned that you touched on it a little bit there, just kind of letting them know that that their firm can do other things.
Sure. So from a practice management standpoint, it starts with just a real simple acknowledgement that as advisors, other than being ethically and morally competent in what we do, every day we've got two major tasks. Task number one is to serve the clients that we work with today. And the second thing that we've got to do from a practice management standpoint is continue to burnish and build upon our brand so that we are seen as professionally attractive to clients that we'd like to work with. So we've got to have a business development side of the equation, and then we've got to have a client advice and counseling side of the business. So we got to acknowledge that every day as advisors, we've got those two challenges. And when we first get started in this business, particularly those of us that started kind of sole practitioner and the like, it was all about prospecting. It was all about the new business development side. And then you work 5, 7, 10 years, you build this business, and now all of a sudden it becomes very heavy on the client advice, counseling, servicing side. But the practices that thrive, they never stop prospecting. They never stop ensuring that their brand is in the marketplace, that they are being seen, heard, read, followed by clients and prospective clients, their community of practice. They are seen as a thought leader in that space. And so when it comes to practice management, it's the full body to help ensure that advisors are building a practice that is servicing and expanding relationships with current clients and is attracting the types of clients that they really want to work with, not just attracting people, not just attracting bodies, but the right type of specialty clients that they seek to focus in on. So it could be everything from the tech stack to their marketing strategy. It obviously is ensuring that they've got a tight investment management process. They've got a tight wealth management process. They've got their network of professionals that are experts in all of these other areas, that they're constantly sharpening the saw to be of greater value to their clients.
All good words of advice. And I think one of the things that you touched on, being seen as a thought leader in that business. I had a former coworker sold his business, and he said he came into work the next day and was laughing. And he said, "You know what? I'm getting calls now from everybody, every advisor." He goes, "What they don't know is that the advisor started working with me 5 years ago because he basically focused on people like me." He goes, and
Yep.
that's what, and it speaks to what you mentioned. It's like you want to deal with people who deal with people like you.
You're absolutely right. And I hear from a lot of people, there's a lot of money in motion right now. A lot of people are selling businesses. Private equity is rolling up a lot of industries right now. And so there's a lot of cash at play. And to your point, it's always interesting to me when I talk to advisors and say, "Yeah, I'd like to work with people that are selling their businesses." And I asked them, I said, "Well, who's your business valuation expert that you work with?" "I don't work with a business valuation expert." "Okay, who do you have in the world of private equity that is giving you counsel and advice?" "No, I don't work with anybody in that." "Okay, from a legal standpoint, who are you working with from a mergers and acquisitions?" "Well, I don't." And I said, "Then you really are way late to the game, because those are the individuals that are working with the businesses 3 years, 4 years, 5 years in advance of a sale. And the advisors that tap into that network and work with those types of individuals and business owners, they earn the right to manage that money 36 to 48 months before the transaction ever takes place." And that's where you've got to be. So to your point, it is being very attuned to the types of clients and how you have to work in that niche to really be considered professionally attractive, to be considered that thought leader.
Excellent point. And I couldn't agree with you more. Well, I feel like we could kind of go on forever here, but I have to ask, because I'm hoping you have one. You've been with Canada for several years. Is there one firm or one group, and you don't have to give us a name, that you really seen that you feel and the firm believes that has really taken everything that, Cannon Financial offers to heart and has kind of really been able to put that in action?
Oh, yeah, absolutely. Now, picking out one particular firm, can you say there's one firm top to bottom? It would be smaller boutiques where that's the way that they organize their business. When you get into the independents, you get into the regionals, certainly get into the wirehouses, the numbers of different types of practices, different types of focuses, you got numerous specialists. But probably my favorite story that occurred, we did a education program, actually a certification program for one particular firm, had 45 people that went through the deal. And that's a pretty significant investment for that firm. And our professional that was responsible for that project, he goes back for round 2 and he's having breakfast with the regional director. And the regional director looked at him and he said, "I just want you to know that this entire program was paid for last week." And he looked at him and said, "What do you mean?" He said, "I had one individual go and have a conversation with one of their long-term clients. And he asked the question that you suggested that he asked about his insurance and his risk strategy." I'll give everybody this question. It's an easy one. The question was, when was the last time you had an efficiency study done on your insurance and risk plan? And the client sat there for a second. He said, "I've got so many policies that I don't even understand why I originally bought them. Some had been for buy-sell agreements. Some were required by banks when I was financing, and I've got all these things. I need somebody to look at." And once the advisor could get his mouth closed, because I'm sure his jaw dropped when the guy said that, he said, "Well, we can certainly do that." And because of that program, he was willing to ask that question. And they worked with their insurance team, and they were able to consolidate in a way that the revenues from that paid the entire fee for the program. So that's the one that makes me smile. It doesn't make me smile so much because of the revenue that was generated. That's a derivative byproduct. What makes me smile is the guy was willing to have a conversation with a person he had worked with for years, and he had never thought to raise that before. And that was an acute issue. It was a pain point for his client. And just by asking the question, he had the opportunity.
That's awesome. I think that's one of the things that for the listeners, everybody kind of wants to hear. You kind of need a good feel-good story for a while.
Absolutely.
So often so. Final question for you, sir. At Harbor, we're firm believers in active management, though it's important to acknowledge that every financial expert has their own unique perspective. From your experience, what is your take on advisors becoming more active in their practice, and where have you seen it making the most significant difference?
Well, actually, with wealthy clients. Wealthy clients, by definition, certainly should have a significant portion of their portfolio actively managed for a variety of reasons, but I'm going to give you probably one of the most conservative reasons. Wealthy individuals have very unique asset structures. They have very unique tax structures. And the ability to manage and mitigate concentration issues, to manage and mitigate tax issues, it requires a perspective that active management plays incredibly well into. And so as advisors, and it's always, it drives me nuts to turn on some of these shows and it's index and go away and the different thoughts that you will hear. But for wealthy clients, for ultra high net worth clients, I say this respectfully, I can't imagine the case that with the marketable securities portfolio that they have, that active management would not be the appropriate play, just given the nature of the wealth and how it's structured. It just makes the most sense.
Last but not least, how can people find you?
Well, relatively easily. Our website is cannonfinancial.com, and I guess you got show notes, so maybe we can create these links there. They can also email me. That is pbuchanan@cannonfinancial.com. But love to chat with anybody about anything, whether it's old fashions or the business of wealth. I'm always interested in meeting new people.
Thank you very much. Now we're going to move on to what I like to call the lightning round, but officially it's called 60 Seconds with Phil Buchanan. Nickname.
This comes from college, and it's my fraternity brothers when they see me. It's GOAT. And it does not mean greatest of all time. It just simply meant that when I was in college, I was always a member of the Clean Plate Club. I could eat anything, and usually in prodigious amounts.
Hidden talent.
I'm a private pilot.
Best professional advice you've ever received.
Always take the meeting.
What's the one app on your phone you can't live without?
I go back and forth between LinkedIn and CNBC.
What's one question you think all clients should ask their financial advisor?
What are the types of situations that families that you work with today where you've been most helpful to them? What are those situations and scenarios?
Favorite way to get active?
I bought a Peloton bike, and I'm really glad that I did, because that Peloton and a bike coach by the name of Leanne Hainsby from the UK, they got me through COVID, and I still continue to ride it today.
Whether you're a seasoned advisor or just getting started, The Active Advisor, brought to you by Harbor Capital, offers professional insights for the financial advisor community. Visit us at harborcapital.com to learn more. And don't forget to subscribe to The Active Advisor on Apple, Spotify, Google Podcasts, or wherever you listen to podcasts to stay up to date on investment trends, tried and tested research methods, and what your industry peers are up to. From all of us at Harbor Capital, thanks for tuning in.
And now for important disclosures. This material is for informational purposes and is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or adopt any investment strategy. The opinions expressed are as of 13th of November 2024 and are subject to change. The opinions expressed by the speakers do not necessarily represent the views of Harbor Capital Advisors, Inc. The information and opinions contained in this material are derived from proprietary and non-proprietary sources deemed by Harbor Capital Advisors, Inc. to be reliable and are not necessarily all-inclusive and are not guaranteed as to accuracy. This material may contain forward-looking information that is not purely historical in nature. Such information may include, among other things, projections and forecasts. There is no guarantee that any of these views will come to pass. This material may not be representative of the experience of other individuals. Reliance upon information in this material is at the sole discretion of the viewer. This material is not legal, tax, or accounting advice. Please consult with a qualified professional for this type of advice. Investing involves risk, including the risk of loss. Stock markets are volatile, and equity values can decline significantly in response to adverse issuer, political, regulatory, market, and economic conditions. Fixed income investments are affected by interest rate changes and the creditworthiness of issuers. As interest rates rise, the values of fixed income securities are likely to decrease. Specific companies and issuers are mentioned for educational purposes only and should not be deemed a recommendation to buy or sell any securities. Any companies mentioned do not necessarily represent current or future holdings of any investment products. Harbor Capital Advisors Inc. does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. This material is prepared by Harbor Capital Advisors Inc. Harbor Capital Advisors Inc. is not affiliated with
Canon Financial Institute.
All trademarks or product names mentioned herein are the property of their respective owners. Copyright 2024, Harbor Capital Advisors Inc. All rights reserved.